Hey everybody, Economic Ninja here. I want to go over a story that actually is less about what I'm going to read to you and more about the moral of what we should have learned from 2008 and the dot-com crash, okay, and how we're going to put it in today. And I'm going to link the story below. It's entitled, "The Moment Wall Street Has Been Waiting For, Retail is All In." Now, if you don't know what the word retail means, that is, they're referring to retail investors. That is just a common person, you and I, just investing in TD Ameritrade, in Robinhood, in any kind of platform that just allows us to buy stocks, okay? And you could have retail investors in any sector, stocks, bonds, mutual funds, precious metals, all that kind of stuff, all right? It says here, the ideal bag holder is the one who adds more on every downturn, buy the dip, and who refuses to sell, diamond hands, holding on for the inevitable Fed-fueled rally to new highs. Now, we've been seeing the buy the dip and the diamond hands all over the internet, all right? And that, I wanna show you today that that is actually not a good thing, all right? Because the smart people know when to leave. You know, you've heard the term or the phrase, sell in May and go away. You know, there's a lot of truth to that because all the big boys are gone and usually you don't see things, you know, investments do very well after May, by and large, because the active traders are all gone, the professionals, and usually isn't the best time to be investing. Now, there are some, you know, I mean, that's actually pretty true in all kinds of different aspects, different investments where they have down months. So here we go. I'm just going to briefly go over this and we're going to talk about it. Old hands on Wall Street have been wary for being bearish for one reason, and no, it's not the Federal Reserve. The old hands have been waiting for retail, the individual investor, to go all in on stocks. After 13 long years, the moment has finally arrived. Retail is all in. It said, if you doubt this, just look at the record highs in investor sentiment, margin debt, and the Buffett indicator. Current valuations are so extreme that the previous extreme in the 2000 dot-com bubble now looks modest in comparison. And I do highly suggest you click the link, go to the story, and check out the Buffett indicator chart, which is the composite value, market value to GDP. It is pretty impressive. What we are seeing right now absolutely dwarfs the dot-com mania. We're seeing that with price to earning ratios all across the board. We're seeing things that are absolutely mind-boggling. And sadly enough, the human race has not figured it out. And that is what I try and show you guys here. It's time to be contrarian. It's time to go against the flow. Now, this isn't financial advice. This is just me talking about what I do. I'm a contrarian investor. I like to go against the flow. For too many years, I went with everybody and I got completely destroyed and decimated. All right, and I want to think differently. I want to be well diversified amongst many financial asset classes, and I want to be prepared with enough cash to take advantage of a downturn. Now, the funny thing is about downturn and how most human beings act is as you're waiting, and I've been waiting, honestly, for 10 years for this, because I knew that the 2008 did not shake out all of the issues it should have. It did not fix everything. Dodd-Frank did not fix a lot of stuff. And so I was waiting for this run up. Now, did I ever, honestly, ever think it would get gotten this big before it would crash? Nope, totally. This is absolutely blowing my mind. Did I know that someday we were gonna run into a hyperinflationary scenario in America? Yep, I did. But still, it just blows you away. You could be as ready as, you know, as you can be, and life still will just blow you away. That's the fun thing about life, is that it just absolutely surprises you every turn, every corner. Well, we are now at a point where I could never have told you way ahead of time that I would have thought a global, you know, pandemic would have caused this. I would have thought it would have just been monetary policy. Now you've got a double whammy. And so I think it's very important for people to take a step back and go, you know, we're hearing all over, stock market's making all-time highs, they're making all-time highs, and yes, it could keep going. We just don't know when. And there's a phrase that's very important for people to learn. It says bulls, and I put it in the description below if you guys remember. It's like bulls climb stairs, bears jump out a window, which means that in a bull market, it's just like ticking up, ticking up, ticking up. But the day that it turns, the bear market starts, a bear jumps out a window and goes straight down. And it's like catching a falling knife. It's very scary. So you have to remember when to take profits. You need to go at this market right now with a lot of trepidation. Trepidation? let's say, because I think that it's very important that people understand where we are. Most people don't. They just see the money in front of them. They don't see the, most people don't even see the food shortages coming. They don't see the shortages now. Yeah, they go, oh yeah, I can't get my appliance. It'll all get better pretty soon. And I don't think they understand how big this issue is. So I just want to leave you at that. I think it's important for people to take a pause. If you know some people are just racing into markets right now, man, I've talked to people all the time that are racing into houses, and they're like, you're like, I got to do it now. I got to do it now. It's like, oh, calm down. It's okay, but I'll never be able to afford one. I'm like, I heard the exact same thing in 2007, 2006, and they don't care. They don't listen to that. So, all right, guys, I hope you got something out of this. I thank you so much for your time. The Economic Ninja is out.